RBI to come out with norms for securitized stress loans. Mumbai, the Reserve Bank of India (RBI) is likely to soon release the final framework and securities of stress assets, which once operational could mark the beginning of the junk bond market in the country. RBI is likely to allow lenders to securities personal loans, MSME loans, and other loans, including the farmer credit in individual frauds accounts, and default securitization will involve holding these loans and selling them to a special purpose entity SPE, which will issue security backed by the loan pool. Assets classified as non performing assets NPA or special mention accounts SMA, land SMA2 are likely to be sold through these pools only on a cash basis with discount based on the asset classification. Lenders are likely to allow the bundle and sell certain type of loans through securitization in including personal loans and loans to a small business micro enterprises. Said a source, however, they cannot include certain assets in these bundles such as loans to the other leading institutions, refinance, exposures of certain financial institutions from loans to individual farmers, fraudulent accounts, and accounts in with full default. The proposal in the loans will be sold on a cash basis. The discount applied to the sale will depends on the asset classification 5% for SMA, 25% for substandard assets, and 50% for the double, full, and the loss assets. The Reserve Bank of India (RBI) is likely to release the guidelines for the securitization of stressed assets, and this will lead to more transactions in junk debate papers, said another source. This comes after the RBI issued a discussion paper in the January 2023 and gathered feedback from various stakeholders in September 2022. The RBI governors mentioned the need of work of a framework. The new guidelines will specify which type of loans can be included in the securitization process. Initially, there are a debate on whether only non-performing assets NPA should be considered for standard assets classification as SMA. The assets quality of lended have been improving over the past few years. Ratio fall to a 2 year low of 3.2% at the end of the September 2023. After RBI asked NBFC to move the systems of marketing days past due on a daily basis, NBFC have been gross NPA declined to 4.6% in September 2023 from 5.9% in September 2022, accordingly to the RBI's rule report.